In this video, we will look at Google. First, we're going to look at the main segments of the business. We're going to look at the main sources of sales. We will look at the recent developments in Google, the main risks investing in Google, and then we will try to come up with the fair value of Google stock. So, let's get started. According to a recent 10K report, Google revenue for 2021 was around $257 billion. That is an increase of 41% from the previous year. According to fourth quarter, the main sources of sales were Google Search, YouTube Ads, and Google Network. Other segments like Google Cloud or other bets are not yet profitable, but it may change in the future. According to recent news, there will be a stock split of Google stock. There may be two benefits. First, right now, Google stock is trading at close to $3,000. And after the stock split of 20-1, it will trade at around $150, so the stock will be much more affordable. The second possible benefit is that Google stock may be included after the stock split in the Dow Jones Industrial Average. The Dow Jones Industrial Average is price-weighted, so it cannot include Google stock of the price of 3,000, but if the Google stock will trade at around 150, it is very possible that it will be included in the Dow Jones Industrial Average. As a result, a lot of funds will start buying the stock, so this implies a huge upside potential. Okay, Google has three classes of shares. Class A shares, which has 1 vote, ticker GOOGL. Class C shares, GOOG, which has 0 votes, and Class B shares, which has 10 votes. Class B shares has the majority of votes. So basically it doesn't matter what class you buy, Class A or Class C shares. But Google recently repurchased a lot of its shares and they repurchased Class C shares. So I believe if we decide between Class A shares and Class C shares may be a better choice because it can have a little more upside because of the stock repurchases. When analyzing a stock, what I really like to see is that super investors are also buying the stock. And during the last quarter, Terry Smith entered a substantial position in Google, around 3%. Terry Smith is the author of the book Investing for Growth. So this is a very positive sign. I really want to see super investors are buying at the same price level that I'm considering entering the position. Okay, now let's look at the main risks investing in Google. First of all, it's the regulation. Just recently, Google was fined of around $2.4 billion over its shopping services. $2.4 billion is not a significant amount for Google compared to the revenue, but if more regulation comes in the future, it may pose a significant risk for Google. The next significant risk for Google is the growth rate. Analysts are projecting the growth rate to be around 15 to 20%. Everyone knows what happened to Facebook stock or Meta stock, and if the growth for Google will be slower, the stock can crash just like Facebook stock did. So I believe this is the second major risk for Google. Okay, now let's try to come up with a fair value of Google stock. First, we'll need the growth rate. If we look at the growth rate of book value per share for Google, it was around 15-20% for the last 10 years. Google has a return on equity of more than 15%. Analysts of Morningstar are projected for Google to grow at around 16% for the next 5 years. Okay, now let's make the calculation of the fair value of Google stock. I use the growth rate of 16%. We use the current price to earnings and the current earnings per share. I use the required rate of return of 10%. I have made a separate video how to make this type of calculation. What we basically do is that we take current earnings per share, grow them using the growth rate, multiply by price to earnings, and then discount them back to today using the required rate of return. After adjusting for net debt, we get the fair value of Google stock of $3,488 per share, which implies around 37% upside. According to these metrics, Google may be undervalued. Okay, I believe that considering the growth rate, considering the stock repurchases, the future stock split, and the purchase of super investors, Google may be a very interesting investment. But we also need to consider the risk of slower growth rate and the risk of regulations. Here is the video where I show how to make this type of calculation. If you are not subscribed to the channel, you can do this by pressing this button. Thank you very much for watching till the end, and see you in the next video.